Hey everyone, stick with us versus Herd. If it's your first time here, like the content, hit subscribe. If you want to get notifications from when we go live, tap the bell. We go live 30 minutes before market open, Monday through Friday. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. If you're here right now, say what up. We have the S&Ps up 43, Dow's up 371, NASDAQ up 156. Yo, Micah, what's going on? Renji, how we doing? Reggie. And so I definitely thought that the S&Ps were going to hit 2,800. I just didn't know. I thought this week, I didn't know if it was going to be like the next day. You know what I mean? You know, I did sell. So I had a futures contract that I bought around 27.40. So you can see my alerts. I bought around 27.40. I did sell it around like 27.58 or so. So I made like $85. But if I would have held, definitely would have been like a $300 or $400 winner. Whoops. But you know, you don't know what's gonna happen. I wanted to relax last night. I didn't want to monitor my trades, and you know, there was a very strong case for it topping out here and coming back down to like 27.20, 27.30. I'm like, you know what? I'm up $85. I don't want to lose any money tonight. I want to kind of relax tonight, just take it easy. So I took my money. And that's what happens. Yo, Slick, what's going on? Andres, how we doing? Jesse, what up? So we had first of the banks report earnings right now. Man, S&Ps are just ripping. First off, Tesla, yeah, VIX is at 39. So volatility, VIX at 39 is still really, really high, okay? So volatility is still going to be here, but volatility is going to be drying up, you know? So just be mindful. Good morning, Lion. Tesla got upgraded. I know a lot of people shorted Tesla yesterday, including me. Luckily I didn't do like naked puts or anything. I did do a call credit spread that I'm probably just going to close out today. I put it on around like 625 yesterday. It's now 75 points higher than where I put that on, so I'm going to be down probably 100, 150 or so. I'm going to try to take that off at open. That was crazy. What's going on, Daniel? Yo, Gino, how we doing? Yeah, I'll get to earnings in 1 second. Netflix, I also have a call credit spread on, and that's coming down a little bit. I was actually when it hit 400, I was down about $20 on the call credit spread. I have let's see here. What do I have? Oh man, let me put my password in. Hold on. On Netflix, I have the 395, so I'm short the 390 strike. I'm long the 395, so I'm a little bit in the money on this one, but it's coming down. It's coming down. Yeah, J&J. So Johnson & Johnson. Here, let's pull this up because I have their earnings I want to go through. I was just waiting for some more people to join up in here, so they don't miss it. You know, all you early risers right on time should be rewarded. Yo, Eric, what's going on? Joey. Okay, so Johnson & Johnson gapped up. They lowered 2020 outlook, but they raised their dividend to offset that, which I think is pretty interesting. You know, they raised this dividend from 95 cents a share to $1.01, so you're going to get a 6% increase on your dividend, which they're hoping people are more confident to park their money there, you know, versus like a bank per se. Let's see here. What did they actually report here? So they beat earnings and revenue. Johnson & Johnson reported $2.30 a share versus the $2 a share expected, generated $20.7 billion in revenue, higher than the $19.47 billion. So if you're asking if you should sell and if you have like this week's expiration and you trade your earnings, the answer is always yes. And the reason for this is yes, it's going to gap up. IV is going to be at the highest at open, so just be mindful. This could run high. But looking at It's at 145 right now. 145 is basically very known resistance up in here. So 145 is known resistance. You know, it could definitely drop right around here. Also, you're going to get a premium crush. I mean, premium on this run was, I mean, it was relatively low. Implied volatility was 61%, but this could come down to like 40%, 50%. It's going to crush your premium. So it was a $7 expected move to the upside, and it's only moved, you know, only like $6, less than $6, $5.50. So it's only moved. So you're within the expected move. So just be careful that your option was priced in. So you're gonna feel a little bit of a premium crush at open. I mean, or if you hold. So if it stays like 145 and just sits there, you're gonna feel the crush. You know. You're gonna feel the crush. J.P. Morgan and Wells Fargo also reported earnings, which is pretty interesting. Well, Johnson & Johnson, hold on one second. The company lowered its 2020 adjusted earnings forecast to be between $7.50 and $7.90 a share, prior from $8.95 and $9.10. So they lowered guidance. So just be mindful of that. They lowered guidance, which is usually obviously not a good thing. And just be mindful, like this, we just gotta be careful about this stuff for long-term investing. You know, Wolk said the company was forecasting 65% to 80% decline in elective procedures during the second quarter. So we're just so you guys know, we're in the second quarter right now. Right now. Sales in Johnson & Johnson's medical device unit fell 8.2%. So I don't know. I mean, I would say this report, the only thing good about this report is that they raised the dividend, and you know, they did beat Q1, but Q2 is not looking good, and they lowered 2020 guidance. So it's not good. That is not good. That is not good. Going into the banks earnings. Yo, what's going on, Hank Miguel? What's going on? If you're just joining, say what up. Do me a favor, hit the like button. I would appreciate it. Yeah, S45, we'll talk about the airlines and cruise ships in a second. Yo, Jason, we'll talk about the Qs in a second. Let me get through the earnings that we have going on here, and we can take questions and hang out and do all the stuff. But we got business in the front, party in the back right now. Yo, thanks for hitting the like button, man. Christine, if I expected to pop on Roku, I would have bought calls at close. But JP Morgan, I think I played right. So JP Morgan, they didn't do well. Okay, let's just say that their earnings were 78 cents a share versus $1.84. Banks were crushed. You know, there were a couple of things here though that, you know, their trading division posted a 32% increase in revenue. However, their trading division makes a very small amount of money compared to everything else that they do, you know. And the other thing here is profits of 2.7 plunged 69% from a year earlier. So the profits are down 69%, and this is just Q1. The interesting thing about Q1 is we really didn't shut down till mid-March. So most of this damage, I mean, January, February, if you guys remember, we were rocking all-time highs. Things were going good. We were just cruising along. And in January and February, and then middle of March is when, you know, when things kind of came to a screeching halt. And I think this is very interesting that I think, and I've been saying this, that, you know, the price action that we have now, I think people are a little bit overly optimistic. I think the worst is unfortunately yet to come. You know, I think we're going to be battling. Yes, we're going to have huge rip-ups, but that doesn't mean, if we have a huge rip-ups, that doesn't mean things are going to be healthy. Like, we're going to be going up, we're going to be going down. In a bear market, you go up. You know, you're going to have green days. You're going to have multiple green days. Doesn't mean like we're going to have a full recovery. But I'm going to be watching, what I'm going to be doing, especially for my long-term investments, looking at these reports and kind of seeing where the future is. I think people right now are overly optimistic. Most people think that they're just going to go back to work as soon as this whole thing is done, and I don't think a lot of those people, I've been saying this, I feel like a lot of people are not going to be asked to come back. Especially, if your profits plunge 69%, I mean, what are you going to do? It says, well, revenue did prove to be more resilient. The one thing in here that I did see is kind of interesting is the earnings drop was caused by a massive $6.8 billion addition to the bank's credit reserves. The move signals that management expects a surge in defaults across the company's lending businesses. I'm going to repeat that. The move signals that management expects a surge in defaults across the company's lending businesses, from credit cards in its consumer division to energy, real estate, retail sector loans in its commercial operations. So what they're saying here, the bank is preparing for war. They understand that they've been here before. They know that people don't have money, and in a few months, yes, we're going to get the stimulus, but that's a one-time payment, and most of the stimulus can't cover everyone's bills. Like, I don't know about you, but $1,200 in the Chicago area isn't going to go far for most families. That doesn't even cover won't even cover 1 month rent in most places here. I mean, like 90% of the places, unless you live far, far out and your rent's like $800. Right? Yo, what's going on, Rob? So, with JP Morgan, just be mindful of what's going on with these banks, because if people start defaulting, it's gonna be bad. It's gonna be bad, But the play that I did do on JP Morgan. So let me pull up JP Morgan right now. So right now it's at 99. So JP Morgan, let me pull this up here. Okay, so let me analyze this. Okay, so let me just do a little premium crush by 30%. Okay, so I did a 30% premium crush. So what I needed, so right now I was selling. I'm short the 98 put and the 98 call. I'm long, so it's basically an at the money on the Iron Condor. I'm long the 103 call, long the 93 put for protection, but basically I'm short the 98 strike. Trying to suck some premium out. Probably gonna make, I took a $395 credit, $395 credit. Probably only gonna make like 60 to 80 bucks on it, but that's kind of for a play like this is very typical for what you do. So that's what I'm looking at here. It's right now at 99, so we're basically in this sweet spot. So we'll see what happens. I do think that we're going to get a little bit more than a 30% reduction in implied volatility, because it was at like 100% at close. So I'm thinking this is going to come down to maybe like 60%. So maybe we'll go down to like 40%. So if we go down to 40%, things are looking a little bit better. So we'll see what happens. But I'm in the sweet spot right now. Man, S&P's just ripped up. 28.10. Jeez. What's my expiration on that, Chris? It's this week, so I'm gonna try to get rid of it. I need to get rid of it. Hank, what are you doing with the stimulus? I don't know. I don't know when mine's coming. I don't know when it's gonna come. But let's see here. One more thing I want to cover, and then Jason will talk about the Qs. We'll talk about the airlines. And I don't know about this, but and this is kind of what I'm thinking is, the worst is yet to come. I think here's the good news. When I say the worst is yet to come, here's the good news. We're going to be, as options traders, we're going to have the most opportunity that we've had in years as options traders. So this is the good news. Bad news is a lot of people are going to lose their jobs. People are going to lose their homes. But that doesn't have to be us. That doesn't have to be you. That doesn't have to be through trading, through building multiple streams of income. They may take your job, but they don't have to take your money. They could take your job away. They could take your house away. They could take your car away. But if you develop the skills to be a profitable options trader, you're going to make it through. You're going to be okay. Like I tell my wife, as long as you can develop the skills, you have the ability to come back, even if you have a losing streak. Let's say you had a losing month. As long as you don't blow up your account, you can come back from that. You can bounce back. Sure, it feels terrible to have a losing day or a losing week. Sure, it doesn't feel great. But that's business. That's business. But as long as you can trade, as long as you can get through this, a lot of people are going to lose their jobs, and they're going to, what they're going to rely on? They're going to rely on other streams of income. They're going to be selling stuff on Amazon, eBay, trading, everything. So just because they take your job away, just because things get reduced, doesn't mean you have to just sit there and take it. A lot of people, what they do is they just sit there and be like, oh, poor me, I lost my job, oh, I lost my dignity, blah, blah, blah. No, man, hit yourself in the stomach, punch yourself in the stomach, and get up and get to work, And that's really what I think this is. I think this is really good. I don't want to say this, but for the millennials, for people that are younger, I don't even know what do they call them? I don't even know. But people in their early 20s, early 30s, maybe even early 40s. I think this will be good, because this is going to train our minds for the future to, prevent this from happening to you. So let's say you lose your job, things get rough. You're gonna change everything that you do from that point forward is going to change, and it's going to change your life, and it's going to be beneficial. No longer are we going to be lazy sitting in our cubicle no longer are we going to be lazy sitting in our cubicle just collecting that paycheck and hoping that we show up to our cubicle downtown. We don't need to do that. And I think this is going to allow people to start thinking outside the box. You don't need that corporate job. You don't need to basically be a slave to the system to have a nice house. You may be you're going to be a slave to the system, but you're not going to see your kids. You're going to be traveling all over the place. When you do see your kids, you're too tired to do anything with them. Who wants that? Who wants that? So I think this is going to be, I think it's going to be a blessing in disguise. Now it's going to be real rough for a lot of people, but I hope those people can find solace that they don't have to take it. They can learn new skills. And that's what this is about. You're going to have to develop some new skills. Your job may be terminated. AI may take over, but you're going to have to step up, learn some new skills, change the way you do things, and it's going to be for the best. But IMF slashes growth forecast, so we'll see what happens. Right now, the market doesn't really care, moving all back up. The global economy this year will likely suffer the worst financial crisis, and I think that, like we were looking at JP Morgan, the data has to start coming back, and things have to start unfolding. It's only been a few weeks here for a recession to hit, or even like a depression. Things boil up for quite a long time. The Fed can push us along until the inevitable. It is very likely that this year the global economy will experience its worst recession since the Great Depression, surpassing that seen during the global financial crisis a decade ago. So if you guys didn't have a good time during 2008, now's the time to start making some adjustments. While things are relatively well, get ahead of the curve. If you guys didn't have a good time during the last recession, you're not going to have a good time during this one. So start preparing for that right now. Start preparing. If you're not sure, start making a plan. Start doing things differently. Understand, start making a plan. Hey, if your job's taken away, what does that mean? For your future. Can you survive? Do you have 6 months? Do you have a year worth of savings? No? Then what are you going to do? So it's better to start thinking about things right now while things are calm, versus when you're panicking. When you're panicking and you don't have a plan, and this is why they make you do fire drills, tornado drills, all those type of drills, because when you're panicking, you're not going to know which way to go. You don't know what's up from down. You're just going to be like, oh, over here, over here, over here, and just trying to put out fires. You're not going to have a calm and collective plan. You're going to be irrational. You're not going to be thinking straight, and that's why you want to have a plan before all this comes down. It's going to happen. JP Morgan, all those banks are preparing. Now maybe the Fed's going to push so long. I don't know. But right now I think you want to err on the side of caution. All right. So had a couple questions up in here. So someone was asking S45, you're still looking at United Airlines and CCL. Jason, Qs, you can ask a question about the Qs. Go ahead. Jason bought the 515 Tesla call 627, 47.85, sold at 650 for 440, sold for dirt cheap. Yeah. Well, I mean, you can't anticipate that Tesla's going to rip up to 700. I mean, like, who would have thought that? And if people thought that, I mean, obviously everybody would be rich, right, in the market. I mean, who would have thought that was going to pop up to here? But they got upgraded this morning. It was kind of like the perfect storm. It was a short squeeze. They got some upgrades. I mean, do they deserve to be 120 billion market cap? I don't know, bro. I don't know. All right, S45 UAL. Yo, thanks for sticking around. So, I mean, what we do know is the airlines are going to get bailed out. Right now, what is it at? 30? So, I mean, travel's going to be down quite a bit. I mean, I don't know if we're looking to go long, but I mean, it's not a bad idea down in this area. The airlines are going to get the airlines are going to get bailed out. But I mean, how long is travel going to be down for? I mean, that's essential. That's essentially, people traveling for work using the airlines. Right now, they can't travel for work. We can't go to hotels. We can't go to resorts. We can't do any of that. So how long is that going to be down is the question. I mean, if it pops back down to like 25, look to get a little longer here, maybe even 28 area, 25 to 28 area. Yo, Jason, if you just let it ride to 650, I mean, I would take my profits. I mean, profits are not. I mean, sure, Tesla could go up to 900 this week. It could, but do you want to leave all that money on the table? There were a lot of people that were shorting in this market who just got ripped a new one because they said, "Oh, this hold." They just lost all their profits, man. So it depends when your expiration is and stuff like that too. Like if you're trading this week expiration, I mean, yeah, you want to hold that thing like it's a hand grenade. If you're holding this week expiration, you want to hold that thing like a hand grenade. If it's months out, then you got time to kill. You're not going to be really worried about it. If you still think it's going to be up there, but it's. The thing about Tesla. Here's the thing about Tesla. There's going to be a massive dip, and if you still want to get long, there's always more opportunities. There's always more opportunities. People get I even do it myself. I was like, oh man, I had a really good entry. I don't want to sell, but I want to take my profits. I had a really great entry, and you're holding on to this like perfect trade, and it's not perfect unless you take the trade off. You know what I mean? And you're $50 in the money. It's gapped up. It closed at $650. It's $700. I mean, this could easily flush back down to $650 at open. I mean, I'm not saying it could. It's not out of the question. This could definitely, all the people taking profits could flush back down to $650, and then you're gonna be like, man, I wish I just sold it at $700 when I opened up. You don't know. Nobody knows. You have to do your best to manage risk. I mean, it could pop up to 800, sure. Now Tesla's really moving. Could pop up to 800, but do you want to risk it up in here? I mean, for me, probably not. Right now it's at 700. If it pushes up to 800, I mean, it could, but it really depends. But I do know there's gonna be a massive dip. So I'm short a call spread, Hank. The puts were really what I put in Hank in there. I mean, I like so it's I like shorting Netflix up in here. I also have a debit spread on for earnings for May, but I mean their puts were kind of expensive. Like next week, you're looking at $20, so that's why I went with the call spread. I wanted to be close to the money, and I didn't want to risk $2,000 on a single put option for Netflix. That really premium really jumped up there. But you're gonna have, because next week is Netflix earnings, I believe. Yeah, April 21st. So 1 week from today, Netflix earnings. That's why they're so expensive. So you're you're either stuck playing this week's or paying more for next week. So that's why you want to be careful. So I sold some premium for this week. Is what I did. Looks like we have JP Morgan popping up a little bit here, so I'm going to try to take my profits on that this morning. I need to close. I hope it falls. Let's see. Matthew, I have a 25 DAL put expiring on the 24th that I want to sell today. At what time would it be the best time to sell? At open. Implied volatility is always the highest at open. Now, who knows? Throughout the day, it could go your way more. Who knows? It could go against you. But implied volatility is going to be the highest at open, and then after open, it gets crushed down a little bit when we kind of level out. So just be mindful if you're looking, and that's why people often take profits in the morning. Is especially let's say Tesla. This is going to gap up pretty huge. Volatility is going to be off the chain because it gapped up 50 points. You want to take advantage. Like an increase in volatility is going to outperform any dollar amount it can move. So even let's say Tesla gapped up to 700, right, and it stayed the same, and then moved up to 725. You might get paid more at open at 700 than it slowly moving up to 725 an hour later. So that's just one example. That's just one example. If you're just joining, say what up. If you guys can do me the favor, hit the like button. I appreciate it. Once you've been option trading for a while, you'll start to see pricing that worked out to your advantage, and it'll start to click on how volatility kind of helps you out with price, or it hurts you depending on what position you have. And that's why I think options are pretty tricky, because there's a lot to it, versus just buying and selling stock. You don't have to worry about all the Greeks. You don't have to worry about all this stuff. But buying and selling stock isn't as much fun. It's definitely less risky, right? Yo, Joey, appreciate you, man. Yo, Clinton, what's going on? Arctic Wolf, a lot of people in here. That's some big information, making sense. I feel a bit fired up today for some reason. I don't know. I think it's because I switched my allergy medication and I'm feeling better. For the last week, I've been feeling like garbage because of like allergies, and I've just been feeling real lethargic. I haven't been doing well, but we're back on. We're back on. We switched from the nasal spray to the Zyrtec pills, so we're good to go. I'm just trying to go through all these comments here, guys, making sure I didn't miss anything down in the garlic. Market's about to open in 1 minute. We have S&P's up 47, Dow's up 404, Nasdaq, and it seems like we get Nasdaq's up 159. We get most of the moves pre-market, and then like the last 10 minutes of the day, and the rest of the day just kind of is stale. It just kind of sucks, Yo, man, thankfully, I didn't have the Ronas, man. Thankfully, I haven't. I gotta stay healthy, man. I gotta stay healthy, You think CCL will continue to trend up? I mean, probably. I mean, as long as the market's moving up, and it's probably gonna move up. It's only $12 stock. I mean, it's down here at $12.50. It's probably going to move back up. But however, just be mindful. This is still in a downtrend. Even at $12.50, it could make a lower high here. Right at 14. Just be mindful. It's still in downtrend until it can break above, basically 15 and then 20. There's no reversal here. It may move up a few days, but it's still in a downtrend. All right, let's see what we do. See what we do here. Okay. So premium's jumping all over the place. Let's look at Netflix here because I got a debit spread on Netflix. What's Netflix doing? Man, that's a pretty sharp drop. 28.13 down to 27.97 on the S&Ps. See what happens. JP Morgan up a measly 3.5%, so that premium crush hasn't happened yet. Only up $18. See what happens. JP Morgan slashes. They said their revenue's down 69% from a year ago, and it's up 3% on the day. I mean, how is that possible? Like, how is that possible? I mean, what do you guys think? You think just because everybody's short, it's not going to go down anymore? They're going to squeeze people out for the next leg down? I mean, we're definitely going to go lower. If everyone is slashing outlook 2020, I mean, 2020 is going to be a bad year. There's going to be no reason we're going to be at all-time highs. Yo, Ariana, what's going on? So, I mean, I'm neutral JP Morgan, and I'm glad I didn't go short or I didn't go long because, I mean, the expected move yesterday was like $5 and it only moved, it was like $4.90. It's only moved $2.40. So we're taking in some premium now, but I'm hoping it can, volatility is a little bit high here at open, so I'm hoping it can suck out some more premium here. But I mean, I think that in this type of market, what we're looking at is just broad optimism. You know what I mean? Like, just being optimistic is moving the market. Numbers are not moving the market. So when you're doing technical analysis or TA, it's not going to make sense. It's not going to make sense, guys. So just be mindful of what the market is feeling. Just be mindful of what the market is not paying attention to the numbers right now. The market is moving on hope and optimism. And, like we always say, hope is not a strategy. People hope the stock gets to a certain price. People hope, but that's not a strategy. And right now the market, and we've been dealing with this for a long time. The market wasn't matching up with earnings. The market wasn't matching up with company valuations. And, honestly, all that stuff is it's all kind of dead. You know what I mean? Haven't heard SP for a week. UK got 12,000 new cases. Yeah, I mean, and then let's say they open things back up. Are we going to be moving back down again? You know what I mean? Once cases start popping back up. I mean, the coronavirus is not going away. Now, do we need to be scared of the coronavirus? Or do we not? I don't know. I mean, I hear, and I'm not talking about the media. I know people personally that have overcome the coronavirus with minor symptoms, but then I know people personally as well that they ended up in a coma and they're on a ventilator. So I don't know. I don't care what the media says, but I know people personally that have gotten sick, have been hospitalized, have not been hospitalized, and I've been listening to what they've been saying about their experience. Based on their experience, it's not something that you want to get, for sure. Regardless if you get the mild version or not, it's not a fun thing. It's not a fun thing. But you don't know. Hank, some did, some didn't. Some were healthy. You don't know which one you're gonna get. Like, am I gonna get, because I'm a healthy person, I'm gonna be fine? I know people that have mild symptoms, or am I going to be the one that's on the ventilator? I don't know. I have no idea. So I've just been, people that I know personally have gotten it, and I've just been trying to rely on that information. Obviously, the media likes to have some clickbait and stuff. But if you know people that have gotten it, reach out to them, see what their experience was, and if it's something that you're not afraid of or not something that you care about, listen to them. Is the stock market real if it's based on speculation? Pat, if is the I mean, that's a loaded question, because right now it's very tough, because it's like, hey, the market's having a bad year, let's have the Fed just print a bunch of money. Now, if the Fed can print a bunch of money, can't they just pay our taxes? Why do we have to pay taxes then? Are taxes fake? Why does the government need taxes if they could just print more money to cover their bills? Why are we at a multi-trillion-dollar deficit if they could just print more money? I don't know. Something bad's gonna happen one day. Daniel, what's up? Something bad is gonna happen one day, and we're not gonna know how to fix it, and there's gonna be no way of fixing it. But until then, let's just kick the can for future generations and hope for the best. But if you're saying is the stock market real? I mean, the stock market is real indeed. That it moves billions and trillions of dollars, and companies are valued at billions and trillions of dollars, and what determines that value is up to the investor. It's kind of like your house. What's the real value of your house? You could say, hey, my house is worth $300,000, but people are like, no, bro, your house is only worth $150,000. Sorry, but my house is worth $300,000. I just bought it for $280,000 10 years ago, and I think it's worth $300,000. It doesn't work like that, and that's the way the stock market works. Like it's supposed to be a free market, but the stock market's a little complicated right now. But if you're looking at, like, if you just think about your house, if you think it's worth $300,000 and buyers only think it's worth $150,000, it doesn't matter what you thought it was. It only matters what somebody's going to buy for that. So if someone wants to buy Netflix at $400, they want to buy Netflix at $400. They think it's worth $400 a share. Someone wants to buy Tesla at $709 right now. That's what they want to do. People wouldn't buy at $710 if they didn't think it was worth $710. It wouldn't be this high. So the market, the thing that you have to understand about the market is extreme fear and extreme greed. Both are equally dangerous. So when the market is moving up uncontrollably, that's extreme greed. When the market is moving down uncontrollably, that's extreme fear. And it's based on people's emotions. It's based on what's happening on the economy. It's based on what people are feeling. And that's the same thing that people take into, like, business deals. People make business deals, like, forget the stock market. People buy businesses because they feel good that they can turn that business into a profitable venture. People buy homes, or they buy apartment complexes because they feel good about turning that into an investment, And that's the same thing about the stock market. If people feel good about the stock market, they're more willing to invest. If people don't feel good about the stock market, they're going to take their funds out. So that's kind of how it is, People in America understand what earnings are and the economic effect, the lockdown of it, so there's no excuse for it going up other than being pumped. Well, right now there is. Here, look at this right here. Look at this headline right here. Optimism. This is what I'm talking about. Optimism. It doesn't matter. Who cares about the numbers? Optimism is moving the market. Dow jumps 500 points as the coronavirus outlook improves. This has nothing to do with the stock market, other than the coronavirus numbers are improving. However, they're improving because we're locked inside our freaking homes and we can't go anywhere. So I don't know what that means when we Jim Cramer says the worst case scenario has been taken off the table, and if Apple and Google can do contact tracing that we all embrace, that's the other thing. That's the other thing that's really, for me, extremely scary right now. Contact tracing. So before all this coronavirus thing went down, right? We were all like worried about our privacy on Facebook. We were worried about Google tracking us. We were worried about our iPhone tracking us. We were worried about all this stuff. We were worried, as soon as the coronavirus hits, we don't care about security more because we care about safety. Safety out, so we care more about safety more than we do security. And now we're allowing Google and Apple to come up with a way to track coronavirus, people that have coronavirus, and let people know, like me, if I potentially came in contact with one of them. I don't like it, guys. I mean, I'm big in IT, I'm big in security, and I don't like it. I mean, I don't like that. Those headlines are bait for retail to buy. The big guys are unloading. I mean, yeah, big funds. I mean, and there's people, they're loading. So if you guys don't know how like the big funds really work, I mean, I highly suggest you. They don't trade like we're trading right now. They move billions of dollars into over a period of time for that position to work out over a period of time. So they're not just shorting like maybe they might make a little bit on day trades and stuff like that, but the majority of their wealth of these funds are made by moving billions of dollars into a trading plan, trading idea that works out over a period of time. So they're obviously, like if we look at SPY right now, we're looking at SPY, they're obviously, when we're talking about retail investors versus the funds, they're looking for the next leg down and they're building a position. They might not hit it exactly right, but they're starting to build a short position for the next leg down. I want to see what happens when we come up to the 50-day. What's going to happen? The 288. What happens at the 50-day? Are we going to blow past it? Retest the 200? Let's see what happens. But right now the momentum's the upside. Scary what society will allow in state of fear. Everyone's gonna break their iPhones. like you can't track me, I'm breaking my iPhone. Should I let go of my Ford put? Slick? Ford? I don't know what Ford is doing. We seem to be kind of stalled out here at open. We're stuck. We had a pretty big swing on the S&Ps, but we're not really moving anywhere. But the momentum looks up. Tesla's moving up. Netflix, what are you doing here? Netflix is coming down. Hit pop 404. Netflix pop 404 coming down to 397. So when the market is moving like this, I think when the market is moving slower, what is VIX at right now? Oh man, VIX at 38. VIX is getting pummeled. Oh man, Netflix wow. 395. That's good for my short position. Hold, guys. Hold the line. Yo, Brooklyn, you gotta start waking up on time for market open, man. You gotta get serious about your goals here. But to answer your question, I know for a fact that funds are starting to build in their next short position. They're not stupid. Retail investors, we try to get the quick buck, and this is something that I've been trying to get better at as well, is having a trading plan that works better over time. And you want to buy yourself time. You don't want to make super quick adjustments. When the market is moving slower, you need to move slower as well. So yes, we're popping up here, but this doesn't really mean a whole lot. We literally opened at, what does SPY open at? Okay, SPY opened. We opened at 281. It's at 281.82. Yes, we had a little bit of a swing, but the opening candle was at 281. We've only moved up a buck, so we'll see what happens. But there's a lot of momentum right now. Nvidia's pushing up. I'm not saying you want to go all short or anything like that. You want to do your own due diligence and come up with a plan that works for your portfolio. But let me see I do like this chart here now that Nvidia is pushing up like this. This is a very nice coil. This could definitely push back up to 300 on Nvidia. And like I was saying, if I'm going to be bullish on stocks right now, it's going to be bullish on stocks like Nvidia, MU, I don't know about Intel. Intel gotten a little bit too big. AMD, I might be playing around with a little bit of AMD. I mean, this gap up was humongous. It's up 4% right now. I mean, it's insane. So if we can get a little pullback on AMD, I might look to get a little bit along here, but we'll see. I mean, demand for, as you guys know, demand for technology is through the roof right now. So, these companies are going to benefit. Apple's just crossing the 50-day. I mean, this is a pretty exciting. This is actually a pretty exciting open, pretty exciting day. Netflix is popping again. Yeah, Netflix is going nuts. Apple popping back up with the 50-day. I mean, this chart looks pretty interesting to me. I want to see what happens. If we're gonna push up here, are we gonna make a lower high here? Or are we gonna push past 304, 305 area? So we just need to be careful now. If we're stuck in a period of like limbo right now, you're not sure where we're gonna go. It's okay to sit out. You don't have to trade. And that's another thing that I'm trying to work on is you don't have to trade. Day in, day out. You don't have to do it. You don't. But yeah, it's going crazy here. JP Morgan's coming back down a little bit. A lot of times as traders, we want things to be popping. We want to be moving and shaking, and that's may not be the best thing for your P&L. If you've been trading for a while, you know what the right setups are. Wait for them. If you're like, oh, maybe I'll just throw a trade in here. I threw a trade in Tesla, and now I'm getting my face ripped off. I'm only down like 100 or something, but I mean, I shorted at 620. I had a call spread. That's what happens. I mean, this is just insane. And if you're not like a part of this run, like I'm not a part of this run right now, I'm just gonna chill. I'm just gonna chill right now. Relax. I think we hit market bottom this summer, but does real estate drop with it? The one thing that you guys have to remember about real estate is that it takes a long time for things to develop. People are not paying right now. People technically can't even get evicted right now. It takes a long time, 6 to 8 months to a year, for like real estate to kind of fully realize like, oh, we're in big trouble here. You know what I mean? So, I might be looking at shorting some commercial real estate, but it's gonna have to be like 180 day, 300 days out type of deal that you're gonna want to concentrate on. You're not gonna want to just be like, oh, I'm gonna short commercial real estate next week. I hope it works out. Probably not gonna work out. It's probably not gonna work out. For real estate, as you guys saw in the 2008 bubble, it took a long time for that to come together. And sure, we have the perfect storm right now, but people are defaulting. The banks are preparing for it. It depends on what happens. If people can't afford to live in their homes, obviously valuations are going to be, lower across everything, commercial and, I'm getting clapped on Tesla. Yeah, I think I don't know why I put that Tesla trade on, honestly, because I said I wasn't going to trade Tesla this week. And what did I do? What did I do? You needed 20%. Yeah, and the bank, Brooklyn, the banks changed restrictions now that you need more money to put down. Before, you could kind of get away with 10%, maybe 15%, but now the banks raised the down payment. If the banks make it harder for people to get loans, and there's a good reason for them to do that, right? But if the banks make it harder for them to get loans, things are not going to be moving. Netflix could possibly be the new Tesla's run. It's a crack. Yeah, I mean, Netflix is moving pretty good, but we'll see what happens. I don't trust it. Man, S&Ps are just ripping now. Netflix looks to be tapping out a little bit here, so we'll see if it's going to leg up again. How do you feel about the IV crush that happened over the past month? I mean, I think that was to be expected. I mean, we can't just keep we just can't. We couldn't keep moving at the rate that we couldn't. And the Fed has brought stability to the markets. Ever since the Fed got involved, we haven't had a single halt. Whatever the Fed is doing, I mean, it's good because I don't want the market to halt and us to crash into zero. You know what I mean? Anyone know Brooklyn? I covered JPM this morning. They missed earnings bad. Profits are down 69% from a year ago. I'm surprised it's still green. Honestly, I'm really surprised it's still green. Really surprised. I'm up a little bit. I'm up 11% now on JPM. If it can come down a little bit here, comes down to like 98, we'll be in the sweet spot for JPM. Because I sold 98, the 98 puts and the 98 calls. So if we can come down. Now Netflix, I don't know if it's trying to bait and rip back up. Like is it trying to bait some bears in to rip back up here? That's what it looks like. SPY's going at 285. So yeah, I mean, I think today the market, obviously, yesterday was a consolidation day. Today the market's moving back up. Probably should have loaded more up yesterday. I mean, I had some good trades, some bullish trades on yesterday that worked out, but Netflix and Tesla, I unfortunately shorted. So Netflix we're not doing that bad on. Actually, I'm only on my call spread. I'm down just a little bit, but Toby, dead cat bounce continuing. I mean, we're running on hope. Once hope runs out, you know what's going to happen. You know what happens when hope runs out. Hope runs out eventually. Yeah, I would be careful with Netflix here. I would definitely be careful. And Tesla ripped another $30. It's up $80 already. Yeah, I mean, I do like the casinos as long as people have money to spend and they can vacation a little bit, I mean, what's Wynn Resorts at right now? I didn't even check. Actually, it's holding up pretty good. It did go down to 35 though. Whew. Man, that's pretty crazy. Netflix, just be careful. Be careful here. Yo, Slick, don't chase, man. Gotta wait for the setups. I mean, I'm sitting here doing nothing, literally. I'm just kind of chilling. JP Morgan's coming down nice now. What's Wells Fargo doing? No one will remember the coronavirus next year. It'll be business as usual. How come this is not loading? All right, I think I'm gonna close out my spread. I'm gonna close out my spread on. I'm gonna close out my spread on JP Morgan here. We're up a little bit here. Didn't really get the Ivy crush that I was hoping for. What is it at right now? It's at 105 still? No, can't be right. Okay, it came down to 57, so I'm gonna crush that. I'm gonna take that trade off. So we made like $50 on it. Not great, but pretty easy, really lowish trade to make $50 on. Pretty lowish trade, made $50, so I feel good about that. Pat, we're witnessing history. This will change how we interact with each other. Yo, made money. I don't know why I held the Apple short. I'm short Netflix and Tesla, so don't feel so bad, Daniel. But made some money on JP Morgan. How about that? See what Netflix comes in at. I'm gonna be looking for a day trade here, but we need a dip. We need a dip, and not a rip your face off dip. A bull. We need a bull dip. That's what we need. We need a bull dip right now to buy. Yeah, I mean they're definitely squeezing out. They're definitely gonna squeeze out bears. I mean, I'm gonna get some cheap puts on Tesla. I'm not trading it anymore. I'm done. Tesla's cost me too much money. I'm done. I'm done with it. But we're gonna trade our way through this. You know, I think that. I mean, I think that Netflix could drop some more. Honestly. Cheap is considered, I guess, depending on what your capital size is. Like, what can you afford? Some people cheap is $10,000. Other people cheap is $50. So. Let's see what we got going on here. Yeah, looks like Netflix is popping down here a little bit. $15-minute chart. We'll see if we could break like the 397 on the 15-minute chart, 397 area for a little bit of downtrend. Could pull back to 390 area. So let's see. I'll see if I can get a trade in there. We will see. So, anyways, guys, I'll be in the Discord. Yeah, Netflix did touch all-time highs, man. Stay safe. Stay green. It's us versus Herd.